आइए, सो हम लोग ऑलरेडी हम लोग एनपीओ का काफी सारा डिस्कशंस किया है, राइट? सो वी हैव डन डिस्कशंस ऑफ बीआरएस, we have done discussion of final account, we have done discussion for rectification, right? We have done discussion for not for profit making organization. Now it's time to discuss for partnership, right? So what I will do, मैं आपको पार्टनरशिप के बारे में थोड़ा डिस्कशन करवाता हूं, राइट? नाउ जब मैं पार्टनरशिप के बारे में बात करता हूं ना, मतलब two or more person is doing business, right? When I talk about partnership, right? So two or more person is doing business together. What is partnership accounting, right? We have done as of now sole proprietorship accounting. What we have done as of now? What is sole proprietorship accounting? General ledger, trial balance, final account, trading PL. You get net profit, you add it to capital, and you match the balance sheet total. Now, in case of partnership accounting, there is little more you have to do. Once you find out the net profit, right? Calculate net profit, right? Then what you have to do? You have to prepare profit and loss appropriation account. What you have to do? You have to prepare profit and loss appropriation account as to how this net profit will be distributed. In case of sole proprietorship, this net profit belongs solely to the single owner. So entire profit is getting added to the capital. But here, so now our task is to divide this net profit. There might be a case some has provided capital. There might be a case one is only providing capital, no labor. Right? So what we do, we prepare P&L appropriation and we distribute net profit. We give interest. First of all, we give interest on capital provided by the partners. Then next we give remuneration to partners, those who are actively working. And last but not the least, the remaining profit is known as share of profit. Right? Now our task is how this profit will be distributed. What will be the rate of interest on capital? How much will be the monthly remuneration? And what will be the profit sharing ratio? For that, there is partnership agreement. So whatever distribution will be as per the partnership agreement. So distribution will be as per partnership agreement. Is it fine? So first you calculate net profit. Then that net profit belongs to two or more owners. So now we are going to distribute. So first of all, we will give priority to capital. That those who have invested, they should get first their return on money. Means the interest, basic return. Then those who are working, they will get their share of profit, their share of remuneration. And whatever is left after giving interest and remuneration, it will be distributed among them as per the ratio. If nothing is mentioned, no interest, no remuneration, and everyone will share equal. Right? This is in the absence of PA. Right? So usually what happens with capital, I add net profit. But here with capital, I will add interest on capital. I will add remuneration, I will add share of profit. Less drawings will give me closing capital of each partner. So this preparing fee application is partnership accounting. Further, there was constitutional change in partnership, right? Change in constitution. What kind of change? Change in profit sharing ratio. Admission of a partner. Retirement of partner. Death of partner. Right? The ratio is changing. Admission of partner, retirement, death. I am closing the partnership. So first I need to switch these four. Whenever there is change in ratio, admission, retirement, death, it means the future profitability of partnership is changing. So there are adjustments that I need to do. First of all, profit sharing ratio will change. Right? Step 2. Revaluation of assets and liabilities. Existing assets and liabilities, to be very specific. Because whatever is the value of the assets and liabilities, that will be solely attributable to the existing partner. And why revaluation is necessary, you know? Previously, actuator was a sole proprietor in the name of Praveen Patwari. And Balaji was a sole proprietor in the name of Ankit Patwari. Now, actuator has become private limited company. Right? So, every admitted, suppose if I raise some funds, valuation, Shark Tank, you know, what they do? They calculate value of company. On the basis of that valuation, there is funding. So, revaluation of existing assets and liabilities is very necessary when you admit a new partner. Because the new partner is supposed to win on the basis of that valuation. Okay, this is the value of the partnership firm. I am coming for this much share, so therefore I will bring this much capital. That valuation is very important. The basis of proportionate capital of the existing partner. So I need to evaluate assets and liabilities. Suppose I bought one land in the year 2005 for 2 lakh rupees. Now that land is 1 crore. So there is a gain of 98 lakh. I know this gain is unrealized because I haven't sold the land, but still the market value is 1 lakh. Shall I keep the land value at 2 lakh or shall I revalue it to 1 crore? Because the value is 1 crore. The new partner will bring capital on the basis of 1 crore, not 2 lakh. Because since 20 years, I was holding that land. Right? So what are existing assets are like this? I need to revalue it. That's in general reserve. Every time what happens when you prepare this PL Aprona, some part of the profit you transfer it to general reserve for future contingencies. Like what happened? Right now, our company is facing liquidity problem. And the company did not have any savings. Now it will be on the existing owners to bring more further capital. Or else we have to go for a bank loan. So many partnerships from what they do, they transfer 10% of the profit to general reserve. So since 20, there is an accumulated profit which is not yet distributed. Now, since there is an admission of new partner or there is retirement of existing partner, the one is not supposed to have it. So I will distribute in existing ratio. The one must have that share also. So I will distribute in existing ratio. So distribute and general reserve profits, accumulated profits, which is not yet distributed, which has been kept for future contingencies to existing partner. Step 4. Treatment of goodwill. Treatment of goodwill. The ratio is changing. A is to B, 1 is to 1. Means how much A was sharing? 50%. How much B is sharing? 50%. Now A is to B is to C, it is 4 is to 4 is to 2. Now how much A will share? 40%. How much B will share? 40%. How much C will share? 20%. So tell me, I am admitting a new partner. Upon new admission, my profit will increase. Okay. What about the existing base which I already have? Suppose if I onboard some new partner, new owner, if I onboard today some new owner, what will happen? Student base is already. It is because of actuators we will get students. It is because of Praveen sir, Sivangi ma'am, Siddharth sir, whatever, whoever teaches. On the basis of those teachers, I will get admission. What impact a new owner will create? Nothing in my existing business. I have admitted him, I have taken money from him because I want to open a branch in Ahmedabad, Hyderabad, Pune, Bangalore, for that purpose. So since there is a sacrifice, right? There is a sacrifice by the existing partner upon admission of new partner. There is a sacrifice by the Retiring partner is giving his shares to the remaining partners. Same is the case with death. What sacrifice? In future, instead of 50, I will receive 40. Instead of 50, I will receive 40. This is the sacrifice. So when future profit, but not beyond that. I have a student base. I know that every 6 months they will clear papers and they will enroll for new paper. So on a makeup and activities is going to make 5 year. And for that, no effort is required. This 5 if there is no addition, this 5 50-50. 2.5, 2.5. But new partner has also joined in. So he will existing profits share. But he is not eligible to that. 5% becomes 7%. In any kind of increased profit, I am also eligible, you are also eligible. So what at the outset, at the very first outset, the one who is going to sacrifice in future will ask for compensation. So basically, the sacrificing partner will ask for goodwill compensation from the gaining partner. So now the sacrificing partner will be positive. The gaining partner will be negative. When in future that is distributed, on future this 5 lakh will be realized, right? 5 crore. When it actually gets distributed, the sacrificing will get less, but he was positive. But he will get less. He is neutral. The gaining he gets in future. For him, it becomes recovery. Right? So, ₹5 crore future profit. Right? A is to B, 1:1. A is to B is to C, 4:4:2. Right? So to C's gain %20, A's sacrifice 10%, B's sacrifice 10%, right? This is 50-50, this is 40-40-20. So the gaining compensation to sacrificing. What is my future profit for next 5 years? Year 1, 2, 3, 4, 5. This is I have estimated. So, that is minus 1 crore, right? They are positive 0.5 crore. They are positive 0.5 crore. When in future this gets distributed, this will be A 2 CR, B 2 CR, C 1 CR. Four four two, 244. So for C it is 0. For C it is recovery, and for A it's neutral, because this is less. So anyway, their total is 2.5 CR. And if it has no admission, then how this 5 crore gets distributed? 50-50, 2.5, 2.5. So anything, he will gain when profit increases, not on existing profit base. A new partner never gets share of existing. For that, he needs to give compensation. I guess this cannot be nothing better than this. It cannot be. Right? And the step 5 is prepare capital account and balance sheet. So these are the 5 steps. Done? Okay? Let us start. January. Okay, let us see May. I want to first go for admission sums and then I'll go for retirement problems. Okay. This is admission problem. Very good. May 2025. And this is question number 3B. May 2025, question number 3B. Just read. Please read. So this is unallocated general reserve. So this will be distributed. This is revalued. We have to do revaluation of these items, these assets and liabilities, right? Two is to 2:1. It's an admission case, right? This is capital contribution, and requires some for goodwill compensation, and whatever he will bring, he will be taken by ABC in sacrificing. Whoever is sacrificing in ABC. This is revaluation, 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 revaluation. Right? Clear? Goodwill value they have given us. Right? Okay. They have told that general reserve to be allocated. Even if they did not mention, still we will do that. This is NPSR, new profit sharing ratio is given. Previously I was sharing 50%, now I am sharing 40%. So 10% is my sacrifice. So SR will be OPSR minus NPSR. Simple. OPSR minus old profit sharing minus new profit sharing. There was outstanding liability 1500. It has been paid. No entries made in the books. It means this is transaction not recorded. This is not revaluation. There is creditor which is paid by owner, capital A. So I will reduce outstanding and increase capital of A. Simple. Because earlier I had to give R. Now I have to give owner. Right? Sometimes they also need to pass journal entries. Right? So first is change in PSR. For that there is no journal entry. Second is revaluation. When you increase asset, decrease liability, increase liability, decrease asset, all these things will come in revaluation. Third is unallocated reserve, you distribute to partner capital. Fourth is treatment of goodwill, and last is preparing capital account, right? So you need to understand what they have asked you. Right? Okay. So first of all, they ask you prepare revaluation. It means they have told you to do step number 2. Right? They have told you to do step number 2. Step 1 is not required because they have given us new profit sharing ratio. See 5532 they have given, right? So this is not required. Okay? So first we will prepare Right? Increase by so asset increase means profit. Liability decrease also means profit. Asset decrease loss, liability increase loss. So this is profit and this is loss. Very simple. Yes or no? So they have to increase 3750. It's a profit. I will write on credit side. Asset increase means profit. Right? Very simple. On creating 2% goodwill debt. It means 10% is loss. Yes or no? 10% is what? 825 is loss. So I will show here. Now, in case of provision, what happens? I can decrease debtor directly. What do I do? Provision for DD, doubtful debts. Right? Furniture. We don't have to do step 1 because new profit sharing ratio is given. Step 2 is revaluation. That we are doing right now. Okay? Furniture depreciated by 10%. What is the furniture in balance sheet? 9750. So 10% is 975. Depreciate means loss. Done? Okay. Land and building enhancement. How much is land and building? 37,500. So 37,500 increase. Asset increase means profit. There is no item. How much is profit? $9,450. And this profit will go to where? Partners. Which partner? Existing. Very good. Existing partner. In what ratio? In their OPSR. Old ratio? Is it fine? Okay. This is step 2. In our language, what is step 1? NPSR. That is 5532. This is step 2. Okay. What is step 3 in our language? This black need not be shown in exam. Only the blue ones. What is step 3? Unallocated general reserve. So what is the journal entry for that? General reserve debit. How much is general reserve? 9750. 2. A's capital. B's capital. All will get in their old profit sharing ratio. How much? 3900. 3900. 1950. Okay. Step 4 is what? Treatment of goodwill. Okay. What is value of goodwill? Right? D's share of goodwill. How much? 2/15. Yes or no? 5532. So D's share is 3000. Right? This will be given to sacrificing partner. Old ratio is 2/5 minus 5/15. 2/5 minus 5/15. 1/5 minus 3/15. So anyway, this is 1, this is 5. So for C it is 0, C is not sacrificing. Sacrificing ratio of A is to B is 1:1. Done. So this is the value of goodwill. Proportionate D's share. डी जितने शेयर के लिए आ रहा है उतना ही ना वो लाएगा कॉम्पेंसेशन. यू गिव मी फुल, आई गिव यू फुल. यू गिव मी 2/5, आई गिव proportionate of that. And this will be taken by whom? A and B in sacrificing ratio equally. Sacrificing is done equally. Means 2/15 is given by 1/15 by A, 1/15 by B. Right? A journal entry. This is not asked, still I am doing it. So cash debit to D's capital. 7,500 plus 3,000. So 10,500 they will get. D will get how much? 10,500. They told na, they are getting capital plus goodwill of 3,000. 3,000 was D's share. Now out of this, only 3 will be distributed. So what is D's capital debit? 3,000. Not by full. How much is for goodwill? Out of this, only 3,000 is for goodwill. So that is distributed from. So that's why I am debiting D. To whom I have to give? To A's capital, to B's capital. How much? 1,500, 1,500. Equally. So this is given. This is given. This is told. Right? This journal entry not asked. This goodwill treatment not asked. Means in journal not. In capital account I have to show all this. I am not saying that only the blue are asked in problem. So rest everything will come in working note. It doesn't mean that these black ones will not be shown in exam. Because now the step 5. Capital account. Oh, there are 4 partners. My mistake. Already they have balances. How much? What is the balance? Okay. Now, step 1 is new PSR. It's simply calculation, no journal entry. Step Ankit by revaluation. 9450 in 2:2:1. 9450 in 2:2. Only old ratio. How much? Last one? Okay. By general reserve. 39, 1950. Done. Step 4. Buy cash 10,500. Now contra entry. By D's capital, A will get 1500, he will get 1500. Right? To A's and B's capital, 3000 will be taken out from D. Done? That's it. There is one entry left. There is one liability paid by A. So I will decrease liability and increase A capital. That's it. Get the final balance. So this is 7,500. How much? Just hold on. Tell me. 28? This will be 1500 less. Now you need to prepare new balance sheet with the new asset and liability valuation with new capital balance. Okay? The general reserve will not come anymore. So I'll just show you, you do it as homework. This will be new, 45,000. This will decrease by 975. This will increase by 3750. This is less provision for doubtful debts, right? Cash will increase by 10,500 because only one cash introduced by D. New balance and D will also come. This will get removed. This will be 750, 1500 less, and this will be as it is. Right? So that's it from today. Then tomorrow again we will meet. Okay? So keep practicing more sums on partnership. So tomorrow full day we will do partnership. Okay?